General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right. The work ain't gonna do itself. Let's go. March Saturday week review. Which models hit, which missed? Let's go. NASDAQ. Now Monday, seek and destroy. That was a pre-market move. Took all the juice. They got it in London though. Gotta focus on New York. Shout out to London though. Okay. It's not no framework for Tuesday. Let's look at Wednesday. If it's not clean on the 15th, it's not clean. Wednesday, it's nothing. Thursday was directional, but this is New York OTE. Hindsight, of course, but he kind of gives those vibes. And it completed on Thursday. New York OTE is low-key goated because it happens a lot between some type of dealing range of form, London fair value. It'll be a gap a lot of times. You know this is choppy, like algorithmically it's sound. And it was good base hits, but I'm looking for classic textbook models. This is definitely not one. Take the hind eye, not even really a high. Kind of just bounced off of this new week opening gap. Thursday. where this rotation staying in the same range. Okay. Identity, progress, discipline, patience, confidence. Okay. The choppy, boring weeks threw me off more. Understand each quarter give different vibes. Because it's like you had them choppy weeks, but then you had a real good week. You just gotta go with the flow. No real case study. Experiencing this week. Patience. Nasdaq been giving out patience masterclasses. Next week, improvement focus. Base hits. Do not trade filters. And preserving some capital. This first quarter earnings, I don't think it's gonna be nothing when they start reporting. Let's get some power 3 charts. Just get all these drawings off. Yes, remove them. Okay. You have to respect that too, honey. You have to say anchor formed at key level. You must be respected. Large day, inside day. We never challenged this. So if I was looking to sell buy stops, it never happened. That's a takeaway. It happened here this week. This is only week 2 of this contract. First dealing range of this contract. I think ICT made a video about this today. And I think I had this dealing range on my chart first. It don't count, but I gotta watch that video when I'm done. But this is something you gotta watch. Because I was looking, did we create a new dealing range? No. Like you can say, well, you can't really say because we didn't run any buy stops here. So if I'm just looking at dealing ranges, and this is just a run on liquidity. We never even came back to a premium of that. Nevertheless, anyway, it's random. When they ran the stops, bounced off the 200. Okay, something just happened. Control Z. All right. 200. Tuesday. We just put it through Friday. No, about side liquidity was taken. Inside day Wednesday. Set up an explosive Thursday. Let's go to remove all the drawings. Same thing here, but we kind of bust through it, and then here, I kind of like the idea of the first, because if he's like looking at the first dealing range, we're looking at the first fair value gap, the first, it kind of keeps it to where it's not so much, because when you first learn ICT, we putting 100 order blocks everywhere. Let me see if this even a real. This definitely hit 50%, but I don't know if it hit anymore. So yeah, damn, hold on. It's not an expansion yet. This is a different range. Yeah, let's save this. And hit that here. Same thing. We got a buy stop. We got a buy run here. So we didn't need it. We didn't need it. Top. There's S&T. Yeah, I still was looking for like a better run, because it's like I was looking for a run up to sell, but we really didn't need it after this. And then this, it was like, that's all about side liquidity we gonna get for you. And then the range was already ready to roll here. Friday was like, nah, we're not even gonna give you no no real retracement. Is this not no London OTE here? This is almost a buy side run here too, which is weird. It left it. It's very ugly. This S&T plus that OTE would have been good though. All right, let's get the chart. also reached higher in previous week's range. I think that was the only real big takeaway. Let's see. It's power through on some stocks. Ooh, there's too much going on. This is when that contract started. First real dealing range. 50% of that dealing range. Perfect. You can kind of see we got the SMT here, but I don't know. Let me look at QQQ right quick on the hour. All this drawings. Tuesday. First dealing range. 50% of that range. Yeah. Nah. See here? There is no SMT on the stocks because we ended up taking, or we opened higher than that high. We just didn't get, we didn't do it in the CFDs. Yeah, get the spot chart is cleaner. Yeah, so that happened on both. We actually put ran liquidity. So that was another reason not to run, not to wait. Matter of fact, that goes in a note. I can delete this line. how regular trading network delivery driving the cash markets. Both in Tuesday with Wednesday and futures and CFD had bearish S&P with Nas, as they sell had 3 out of 4 signs not too late for loss out liquidity rate and take the OT. Yeah, that's good. That's good notes. NASDAQ. All right, that's that on that. You have a good day. Peace.